Hey everybody, this is Jim at SP500chart.com. It's about 3 o'clock on Sunday afternoon, July 26, 2015, and we're going to take a look at the S&P 500 chart to see what took place in the past week and how this might have jived with what we were expecting from last week's video. And I want to remind you, I do these weekly reviews. Everybody gets to see this. I just put it on YouTube. It's there for the taking. If you want to see daily analysis like this, and you can spare buying me a cheap cup of coffee out of a vending machine every day, you can get a daily video. If you sign up, it's $24.95 per month. So I would encourage you to think about doing that. It's not very expensive. And I know there are lots of websites that charge more for less. So anyway, before we get started, let me just remind you, the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. What's good for you may not be good for your neighbor, and what's good for your neighbor may not be good for you. You need to know your own risk tolerance so you don't get bit by your emotions. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we got some interesting things to look at here. To begin with, last weekend when I did the weekly review, I mentioned that I thought the S&P had reached a level of likely resistance. Now, there is a caveat. I'll own up to the caveat. And that was, I also said, however, we have seen the S&P form a pattern that looks just like what you're looking at on this chart and hardly budge from this resistance line before it breaks through and sets a new high. Okay? So the idea was be on alert. That could happen. But the fact is, the chart says we're probably going to see some selling during this past week. And indeed, with the exception of Monday, we did. As a matter of fact, we saw a little bit more selling than what I thought we might. At least on Friday, the selling really picked up the pace. And while we're looking at the 30-minute chart, what I want to show you is what took place roughly a month ago and what we're looking at right now. I think there may be a correlation. And really, when you do chart reading, it's all about correlations. It's all about looking at what's happened now and trying to understand it in terms of what has happened in the past. Okay, so let's rewind to about a month ago. We'd come up to this line back on the 22nd of June and met resistance, started to sell back down in a fairly controlled manner. Then, on the 29th, the bottom just fell out. As you can see, this controlled selling picked up a lot of steam on the 29th. And there we bounced on this descending teal line that we had on the chart in that exact location at that time. Pretty sure. You know, maybe we didn't. Let me take that back. Maybe that was when we put this line up there. I know we had this line, but we may not have had this one, so I might have just lied. Forgive me. I'm not going to edit that out. I'll leave it in there. Just forget I said it. But the idea being, and the thing that I wanted to mention, was the fact that we were in a descending channel. Then it just gave up a lot more ground. Out of control, you might say. If this represented controlled selling, this was out of control selling. Now fast forward to this past week. We spent about 4 days inside of a descending channel. The top line I'm happy with, just like as I'm happy with this. And then on Friday, we just blew down through this already steeply descending line of support. What does that mean? A lot of times, not every time, but a lot of times, that means the same thing as when you're in an ascending channel and you blow out through the top of that. A lot of times that is evidence of an emotionally charged investor who is either chasing a stock or perhaps, and that's in the case of if it's going up. If you're going up in a rising channel and you blow out through the top of that already rising resistance line, that's usually due to emotions. And we know that because the calm presence of buying pressure is suddenly overcome by a rush. That, and in the case of a rising market, that rush can come from panicking shorts. It can also come from longs who are late to the party, and they are acting out of emotion, that emotion being fear that the train is leaving the station without them. We saw silver do that years ago, and that was the top in silver. And it has been ugly in silver ever since. Okay? But what we're looking at now is on a much smaller scale. So we were in this descending channel. Friday, we broke down significantly. Well, not technically significantly, but we broke down obviously, let's put it that way, underneath this descending support line. Additionally, as luck would have it, the selling ended right at the intersection of two of our trend lines. This one being our very, very, very long-term trend line that has its beginning point in March of 2009. It does not have a lot of touches, okay? As a matter of fact, you can see back here in early July, we got underneath this line 3 days in a row. But that was a bottom that then recovered. So we ended this past week, right on a point of support. So going forward, does that mean we are guaranteed an up day on Monday? The answer is absolutely not. I think there's a possibility we could come down a little bit more and backtest this. But I don't think it's any coincidence that this is where selling stopped on Friday. Now, if we zoom in a little bit more, and I sort of hesitate to do this because I don't want to put too bullish a picture in where we are right now, because if you ask me, this bears, funny choice of words, this bears, we need to watch this closely, because if we were to come down through these lines and possibly even this one, then our idea of an inverted head and shoulders continuation pattern is something that may need revision. A lot of times charts will show you two faces at the same time. Sometimes you'll look at a pattern and you'll say, well, that looks like an inverted head and shoulders, and then someone else may look at it and say, no, that looks like a double or triple top. And I have to be honest, I'm still somewhat optimistic about the markets, because I don't think we have seen the kind of the kind of psychological requirements. Is that a good word to use? Maybe not. But the psychology doesn't look right for this to be a major top. So if we do come down through this, it doesn't mean it's major, but it means it's something we got to pay attention to. So what I was getting ready to show you that could be interpreted as slightly bullish, but it's a very tiny thing, is the fact that when we started to sell down out of this and getting underneath our descending support line, for the most part we did a good bit of that in the form of what appeared to be a descending wedge. Now, you could say, well, forget the wedge, move this line to here instead. Well, if that's the case, okay, then we made this tiny little skinny descending channel again that broke down through an already descending channel. Regardless of whether you say that's a wedge or you say it is just a channel, the fact is that on Friday around 3 o'clock, 3:06, the S&P started to wiggle free of this resistance line, back tested this line almost perfectly, and then started to show maybe a little willingness to head back up. But I've got to remind you, we are dealing here, okay, an analogy. If we go back on this chart and we look at this, we are looking at the tides, okay? Low tide, high tide, low tide, high tide, low tide, high, low. You get the picture. When we look at the chart in this time frame, we're talking about large movements that take place over many weeks, months, even measured in years. When we move into a daily chart, now we are looking at waves. We're seeing that we had the wave receded, came back on the beach, receded back, receded back. So we're dealing now with waves. When we move in and we look at the 5-minute chart and we look at the little channel that I just showed you, folks, we're looking at ripples. We're looking at very small things. And I don't want to ascribe too much significance to what we saw at the end of the day, especially on a Friday. And why especially on a Friday? Well, shorts who were going into this week, maybe shorting up here at 21.32 or so, based upon this neckline that we had on the chart at the time, perhaps they shorted and they thought to themselves, you know, it's been a pretty good week. I've scalped about 52, 53 points off the S&P. You know something? I think I'll take my 2% and I'm going to cover. And I'll see what happens next week. So it's possible that what we saw here near the end of the day on Friday was simply some traders exiting their short positions. So we need to see what's going to happen starting Monday morning, July 27th. So, guys, I think I've talked long enough. To make a long story short, if we're looking at an inverted head and shoulders pattern, then we need to bounce somewhere pretty near here. I've already made the case that this looks like a little bit of emotional trading that may be indicative of some very, very short-term capitulation, just like we saw back here. But I'll remind you that there was a good bit of wiggling around after we made that low, after we broke down through this lower lower support line in this channel. So we may do something of the same thing over here, and that would be fine. The most important thing is I do not want to get underneath the 2040s. Ideally, I would not want to get underneath this teal line right here. So maybe we back test a little bit more, or possibly we bounce right here. Or possibly I'm dead wrong on all of this. But you've been with me long enough to know that most of the time these things tend to work out the way we sort of think they're going to work out. Sometimes we get thrown for a little surprise. Sometimes it doesn't take the exact path we had envisioned. But this doesn't look too bad right now, and we were expecting weakness throughout the week. We got it. Maybe Friday is the first sign that it's about to be over. Finally, I just want to say one thing. In addition to this support line here, which is kind of from our little double bottom, or whatever you want to call this trading around the end of June and first week of July, that's the neckline. This is our rising line that we saw on that long-term chart. The second thing I want to show you is the fact that we talked about two areas for a possible bounce. The first one was our gap up back on the 16th. The second one was our gap up on 13th. And you can see that right now we are right about at that gap support area. So it is possible that we also see some gap support kick in here. So let's see if starting out on a fresh week on Monday is enough, brings enough buying interest into the market. Watch the futures if you want to. I don't know that I would trust the first trades on Sunday evening, but certainly Monday morning watching the futures then, I think that would probably provide a pretty good indication on if we're going to bounce or not. So guys, I want to thank you for watching. Again, I'll remind you, if you are not a subscriber and you are not getting the videos that I do on Monday, Tuesday, Wednesday, and Thursday, you might be missing some interesting things. So I want to encourage you to think about parting with a little less than 25 bucks of your money every month. Go to sp500chart.com and sign up. Okay? I think that's it. And thanks for watching. Thanks for your support. And thank you for your subscription. Take care.